Okay, so we all know the saying, don't put all your eggs in one basket. Right.
Right.
But when it comes to protecting your income, disability insurance
Yeah.
is kind of like having that backup basket, you know,
Yeah.
just in case something happens.
Yeah.
But here's the thing that a lot of people don't realize.
Mm-hmm.
The tax man might be lurking around ready to snag a few of those eggs from that basket too.
That's right. Yeah.
So today we're going to do a deep dive into disability insurance taxation. We're going to figure out what's taxable, what isn't, and why it all matters so much.
Yeah. It's surprising. This is one of those topics that so many people just don't really, they don't really think about it much.
Right.
They plan for retirement.
Right.
But disability, which statistically is way more likely to happen,
Yeah.
often gets overlooked.
It's true. It's like we all think we're invincible until something happens.
Yeah.
So let's kind of unpack this a little bit.
Okay.
I guess first we should start with, there are basically two types of disability insurance, right?
That's right.
There are the group plans,
Mm.
which most people probably have through their employer.
Mm-hmm.
And then there are individual policies that you can buy on your own.
That is correct, yes. And, the way the taxes work on those is really different depending on how those premiums were paid.
Oh, okay.
Yeah, so it's kind of like, I always think of it like planting a seed.
Okay.
If you plant a seed with pre-tax dollars, then the fruit it bears is going to be taxed.
Okay.
But if you plant it with post-tax dollars, then you get to enjoy that fruit tax-free.
I like that analogy.
Yeah.
That makes it really easy to kind of visualize.
Yeah.
So for most people out there who have, they have a job and they're getting that disability insurance through their employer, is it pretty safe to assume that those are kind of pre-tax seeds that they're planting?
Usually, yes. A lot of employers will treat those premiums as like a business expense,
Yeah, okay. Yeah.
They deduct it from their taxes, which means the premiums are effectively paid with pre-tax dollars. So that makes the benefits taxable later on.
So even if your group plan says, hey, we're going to replace 60% of your income or 70%, whatever it is,
Right.
you might actually be in for a bit of a surprise come tax time because you got to pay taxes on that money.
Yeah, that's right. And that's not the only surprise.
Oh, no.
Yeah, there are 3 other big things that can really shrink those benefits down.
Okay.
And those are SSDI, offset,
Okay.
taxes, which we've touched on a little bit,
Right.
and inflation.
Okay, let's break those down a little bit. So SSDI, first of all, what is that?
SSDI stands for Social Security Disability Insurance.
Okay.
So it's a federal program, and if you happen to qualify for both SSDI and the long-term disability benefits from your group plan, a lot of times your LTD payout will be reduced.
Oh, okay.
So it's kind of like they're trying to coordinate benefits so that you're not getting, double dipping.
Okay, so it's not necessarily replacing 60% of your income,
Yeah,
but it's 60% minus whatever you're getting from SSDI.
exactly. Yeah.
And then on top of that, you said the tax man takes a bite.
Hmm.
So how does that work?
Well, we were just talking about how those group plan premiums are often paid pre-tax.
Right.
That means that part of your benefit is going to go right back to the IRS.
Okay.
And, if you're a high-income earner, it can be a pretty big chunk because of those tax brackets.
So high earners are kind of getting hit twice, right?
Yeah.
Because they have this bigger gap between their base salary and their total compensation.
Right.
And then they're getting taxed at a higher rate on these already reduced benefits.
Exactly. Yeah, it's tough.
Okay, so we've got SSDI offset, we've got taxes. What about the third thing you mentioned, inflation? How does that fit into all of this?
Well, think about it this way. Imagine you get a certain benefit amount today.
Okay.
Now, let's fast forward 10 years. That same amount of money is not going to buy you nearly as much.
Right.
And unfortunately, a lot of group LTD benefits aren't adjusted for inflation.
Oh, wow.
So their value just erodes over time.
So this is really starting to sound like a recipe for a pretty serious financial shortfall, even if you have, what seems like a generous 60% or 70% coverage.
That's exactly right. You really have to look beyond those percentages. Remember that example in the source material about the dental assistant who was making $39,000 a year?
Yeah, they had that group plan,
Right.
and it promised 60%, which, on paper sounds like a decent chunk of change, like $23,400 per year, right?
Yeah, it does. But then they qualified for like $1,000 a month in SSDI,
Oh, okay.
which brought their LTD payment down to $950 a month. And then on top of that, remember their employer paid those premiums with pre-tax dollars.
Right.
So we got to factor in taxes and then...
Sprinkle in a little inflation to erode the value over time.
Exactly.
And suddenly they could be looking at less than $10,000 a year,
Right.
even though that initial promise was 60%.
Yeah, that's a huge difference.
That is a huge difference.
Right.
Okay, so we've been talking about group disability plans, and we've seen how those can sometimes be a little tricky with the taxes and everything.
Right.
What about those individual policies that we mentioned earlier? Are those taxed the same way?
No, actually, this is where things get kind of interesting.
Okay.
So if you buy an individual disability policy with your own money after taxes have been taken out, the benefits are usually tax-free.
Okay.
Remember our seed analogy?
Yeah. Yep.
You planted that seed with post-tax dollars, so you get to enjoy that fruit tax-free.
So no need to share those eggs with the tax man.
That's right. You already paid taxes on that money.
Okay.
So the IRS basically sees those benefits as a return of your own money, not as taxable income.
Wow. Okay. So that's a pretty significant advantage for individual policies, right?
Yeah.
But I'm guessing there's got to be a catch.
Well, there are always trade-offs. Individual policies sometimes have higher premiums,
Okay.
and the underwriting process can be a little more strict because they're looking at your specific health history and your circumstances.
So they're really taking a close look at your basket to decide how much to charge for insuring those eggs, huh?
Exactly. But for a lot of people, that peace of mind and knowing that they're going to get those tax-free benefits is it's worth it.
It's worth the potential extra cost.
Yeah.
Okay, so it sounds like it's really a balancing act, kind of weighing those tax benefits against the potentially higher costs and
Yeah,
figuring what makes sense for each individual person, right?
absolutely. And there's a lot more to consider, too, when you're choosing a disability insurance policy. We'll get into all of that in the next part of our deep dive.
Welcome back to our deep dive into disability insurance taxation.
Mm-hmm.
So far, we've planted some seeds, we've visualized some fruit, and we've uncovered some potential surprises maybe lurking in those group disability plans.
Right. Those pre-tax seeds, as convenient as they might seem at first,
Right.
we've seen how they can lead to a smaller harvest than you might expect when those benefits become taxable.
Yeah, that's right. Especially when you factor in that SSDI offset, the taxes and inflation.
Right.
But before we move on to those tempting tax-free fruits from individual policies, I did have a question about group plans.
Okay.
What if someone switches jobs and their new employer has a different type of plan?
Oh, yeah, that happens a lot.
Yeah.
So let's say you move from a company where the premiums were paid pre-tax,
Okay.
and you go to a company where they're paid with after-tax dollars.
Okay. Would that mean that their benefits are now completely tax-free?
Not necessarily, no.
Oh, okay.
The portion of your benefit that's tied to those earlier pre-tax premiums would still be taxable.
Got it.
The IRS keeps track of each seed you plant, so to speak.
So even though you're now contributing with after-tax dollars, you can't fully escape the tax consequences of that previous plan.
That's right.
Okay, that makes sense.
It really highlights why it's important to, understand the details of every plan that you're enrolled in.
Throughout your whole career, basically.
Yeah, exactly.
And speaking of details, I remember we were talking about how important documentation is in all of this.
Oh, absolutely, yeah.
So if you ever need to file a disability claim,
Right.
you're going to need to prove how those premiums were paid, right? Were they pre-tax or post-tax?
And exactly.
Yep. So keeping good records is really key.
It is because, you don't want any confusion with the IRS when tax season rolls around.
Right, exactly.
So hold on to those plan documents, your pay stubs, anything that shows, confirms how your benefits were taxed.
It's like safeguarding your harvest, right?
It's a great way to put it, yeah.
Okay, so I'm definitely getting the message here. Stay organized.
Yeah.
Be proactive. Don't just assume everything's going to magically work itself out later.
Right, exactly.
Okay, so before we move on completely to those individual policies, let's circle back to that potential shortfall we were talking about earlier.
Okay.
Even with those, seemingly really nice 60% or 70% group plans,
Right.
things can still get a little tricky.
They can.
The dental assistant example, really highlighted how the SSDI offsets, taxes, inflation, all that stuff can shrink those benefits down significantly. Yeah.
It does.
So is that where individual disability insurance kind of steps in to save the day?
Well, it can, yeah.
Okay.
Remember, with an individual policy, you're using your own after-tax dollars to fund it.
Right.
So those benefits are generally tax-free, which, that can be a big deal.
Yeah. It's like having a protective shield against all those benefit shrinking factors we've been talking about.
I like that. That's a good analogy.
So individual disability insurance can kind of help fill in those gaps
Yeah.
that are left by group plans
Yeah.
and provide a more kind of reliable income stream
Exactly.
if you become disabled.
Mm-hmm.
But I'm guessing it's not like a perfect magic solution.
Well, there are always trade-offs.
Okay, so what are some of the drawbacks to individual policies?
Well, as we mentioned earlier, the premiums can be higher
Okay.
than with group plans, and the underwriting process, as we said, it can be more rigorous
Okay.
because the insurers, they're looking at your individual risk,
Right.
based on your health history, your job, your lifestyle, all of that.
So they're really looking closely at that basket before they decide how much they're going to charge to insure those eggs, huh?
Yeah, exactly. Yeah.
Okay, so it sounds like for a lot of people, though, that peace of mind
Hmm.
and those, nice tax-free benefits
Right.
outweigh the potential downsides.
For a lot of people, it does.
Yeah. Okay, so it seems like it's a really personal decision,
It is.
weighing those pros and cons based on, your individual situation.
Absolutely, yeah. There's no one-size-fits-all answer when it comes to disability insurance. It's
Yeah.
all about finding the right fit for you.
Okay, so we've covered the basics of both group and individual policies.
Mm-hmm.
We've talked about the potential pitfalls. We've looked at the tax-free benefits.
Yeah.
But I'm sure our listeners are probably like, okay, that's all great, but like, what do I actually do?
Right.
Where do I even begin?
That's a great question.
Yeah.
Well, the first step is to really take a look at your current disability insurance coverage.
Okay, so whether it's a group plan through work
Right.
or an individual policy,
Yeah.
you're saying don't just like file it away and forget about it.
Yeah,
You
exactly.
really need to understand what it says, huh?
You really do, yeah.
Okay.
Don't just skim the surface. Really dive into that fine print.
Okay.
Pay attention to how they define disability, the benefit amount, the waiting period before those benefits kick in,
Yeah.
and how long that coverage lasts.
And of course, how those premiums are paid and whether those benefits are going to be taxable or not, right?
That's right, yeah. That's crucial information for, planning your finances and for taxes.
Right, exactly.
So once you've really, dissected your current coverage,
Okay.
you can figure out if it really meets your needs or not.
So for someone who's only relying on a group plan through work, what are some of the kind of key questions they should be asking themselves?
Well, first of all, ask yourself, is the coverage amount actually enough to replace, a good chunk of my income if I need it? Remember, those group plans are usually based on your base salary.
Right.
They don't include bonuses or any other, compensation you might get.
And as we talk about, those benefits can be reduced by SSDI,
Right.
by taxes,
Mm-hmm.
eaten away by inflation.
Exactly. So if there's a big difference between your base salary and your total income,
Okay.
or if you're worried about those, those benefit shrinkers,
Right.
it might be a good idea to think about supplementing that group plan with an individual policy.
Okay, so it's like adding a second, maybe a little bit more secure basket to hold those eggs.
Exactly.
Okay, so let's say someone decides, you know what, I do need to look into an individual policy.
Mm-hmm.
Where do they even start?
Well, trying to navigate the world of individual disability insurance on your own
Right.
can be it can be pretty tricky.
Yeah,
It's a specialized field. There's a lot of nuances.
right.
That's why I always say working with a knowledgeable, experienced insurance professional is so important.
Okay, so they can help you kind of wade through all those options and find the right policy
Exactly.
for your specific needs.
Exactly. They can
Yeah.
help you figure out how much coverage you should get,
Okay,
what type of policy makes sense for your job,
right.
and any extra, what they call riders that you might need.
Riders, what are those?
Oh, riders. Those are like, think of them like optional add-ons to your policy.
Okay.
Some common ones are like cost of living adjustments to help keep up with inflation and future increase options so you can, boost your coverage as your income goes up.
So they might add to the cost, but they
Right.
can provide some valuable protection down the road.
They can, yeah. It's all about weighing those pros and cons.
Right.
And here's another pro tip.
Okay.
Don't just take the first quote you get. Shop around. Compare offers from different insurers.
Okay, so it's kind of like you wouldn't buy a car without, checking out a few different models first.
Exactly.
Yeah.
Exactly.
Okay, so each insurance company kind of has their own way of doing things.
They do, yeah. They have their own underwriting guidelines, their own pricing, so it's really good to get multiple perspectives.
And speaking of underwriting, I remember you mentioned the definition of disability in individual policies
Mm-hmm.
and how important that is.
It's huge.
What should people be kind of looking for there?
Well, you want to make sure that the definition matches your occupation,
Okay.
the specific type of work that you do.
Right.
You want a policy that covers you if you can't do your own job,
Right.
not just any job.
Okay, that's a really important distinction.
It is. It is.
That could be the difference between, getting benefits and not.
Absolutely. Yeah.
And here's another thing.
Okay.
Don't just set it and forget it. Right.
Right.
You don't just buy a policy and then assume that you're covered forever.
No, no, no.
Okay.
Things change, right?
Right.
You get married, you have kids, new job, your income goes up. All of these things can affect how much disability insurance you need.
So regular checkups for your insurance, just like you get for your health.
Exactly.
Yeah.
Make it a habit to review your coverage every year, maybe around the same time you're reviewing your other financial goals.
Right.
And make adjustments as needed.
Okay, so by really taking a proactive approach to disability insurance, we can make sure that we're not just protecting our income, but we're also protecting our lifestyle,
Right.
our dreams, our ability to take care of our family.
It's about having that safety net in place, so if something happens, you can focus on getting better.
Right.
Without that added stress of worrying about money.
And that's really what it's all about, right?
It is, yeah.
But there's one more thing, one more aspect of disability insurance that I think a lot of people kind of overlook. Welcome back to our deep dive. We're here for the final part of our look at disability insurance taxation. And wow, we have covered a lot of ground. From those pre-tax seeds and their sometimes taxable fruit
Right.
to the tax-free benefits of individual policies. We've shopped around for some metaphorical baskets, made sure they were nice and sturdy
Yeah.
to hold all those precious eggs.
Those are good eggs. We want to protect them.
Absolutely. But, before we wrap things up completely, I think it's important to kind of shift gears a little bit
Okay.
and talk about, the human side of disability. Because at the end of the day, it's not just about numbers, right?
Not at all.
It's not just about tax codes and policies and all of that. It's about real people and their lives.
Exactly. It can happen to anyone. Doesn't matter how old you are, how much money you make, what you do for a living. And it can have a huge impact,
Yeah.
financially and emotionally.
Right. And I think it's easy to get, really caught up in the details of policies and premiums and all of that. But it's important to remember that behind every single one of those claims, there's a person with, their own hopes and dreams and responsibilities and all of that.
That's right. And that's why I think it's so important to approach this whole topic of disability insurance with, a sense of empathy, with understanding.
Yeah.
Because these policies, they aren't just contracts. They represent a promise.
Right.
A promise to support somebody during a really tough time.
A promise to help them, maintain their independence, their dignity. And that's really, I think, why we wanted to do this deep dive. It's all about, demystifying disability insurance taxation to give you the knowledge that you need to make those smart choices and protect yourself and your family.
Because when it comes to disability, knowledge isn't just power, it's peace of mind.
Yeah.
Knowing that you've got that safety net.
That you can focus on getting better.
Yeah.
Without that added stress of money worries.
Right, exactly.
So as we come to the end of our little journey here, I want to leave our listeners with one final thought. Disability insurance, it's not just a financial product.
It's a promise.
It's a promise to yourself, to your family, that you'll be there for each other no matter what.
That's a good way to put it. It's a commitment to protect your future.
Exactly. And while, none of us ever want to have to use it, that peace of mind that it gives you, it's priceless.
It really is.
So take the time, do your research, talk to a professional if you need to, and make those informed decisions.
Because when it comes to protecting your future, knowledge and preparation, those are your best friends.
That's right. Well, thank you for joining us for this deep dive into disability insurance taxation. We hope you learned a lot. And remember, your future is worth protecting.